Let's talk more about those movements with Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time this afternoon. Now, the price of Brent crude went down to around $91 a barrel over the past few days. It's up now to $94 again. What were the reasons of that sudden decline and now increase again?
You know, the oil price, just like most commodities, is priced in dollars. So we've seen a stronger US dollar. So as a result, it's making it expensive for other users of other currencies to be able to buy that. So that compounded the issue that given that we expect interest rates to stay higher for longer, and that's got a possibility to slow economies. And should economies continue to slow, then fuel demand as well will weaken. So that impacted that as well. Hence, we saw the oil prices behaving the way it was behaving, and we know for the past week or so it was supported by the fact that we've got huge cuts when it comes to supply from the likes of Saudi Arabia and Russia.
Now, it might still be a bit early, but what do you think could be the fuel price announcement which we're hoping for later this week?
You know, should oil prices continue to go down and the rand also come to the party, meaning strengthening, that should be great news for us. But as it seems now, we've seen that the rand has been struggling, and all because we've seen a firmer dollar, and that dollar was led by the legs of the treasury yields going up, and also the rand struggling because we've seen commodity prices not doing that great, given that the rand itself is a commodity currency. So you also need the rand to come into play.
Makwe, I saw a lot of rate today. How has the market performed?
You know, markets continue to have some secondary reaction to the higher for longer interest rates. We know that happened last week, but markets continue to react to that. And also markets continue to have concerns about this renewed issues when it comes to the Chinese property market that might spill over to other markets or sectors. And also remember the US, they've got up until Saturday to try to avoid a shutdown. And should that happen, then that definitely will affect their creditworthiness, even though the economic effects might be short-lived. But we've seen that in the past 3 shutdowns in the last 10 years, markets continue to behave well. But as it is, market sentiments were even worsened by the fact that there's a US September consumer confidence mixed expectations.
Now let's go to some company news. Discovery is now entering the home loan sphere.
And I think it's a good move for them. You know, this is a bank that was launched almost 4 years back or so, and now they want to compete, you know, head on head when it comes to the retail banking, and they have been piloting that from October with their own employees and also with some of their financial advisors, and that will be also done, this whole platform, by home loans. We know that it's 50% owned by Standard Bank, 25% by the PIC, and another 25% by another consortium. But I think a takeaway from this, the guys are trying to say, if you continue to manage and engage your finances, okay, then you'll also get a discount of almost 1.5% on your interest. So that should continue to attract good customers. And we've seen in their previous results that the bank itself performed well in all metrics, and also they continue to attract quality clients.
Just a quick one on Discovery, Makwe. We saw these high interest rates. Are people still buying houses in this economy?
They are, you know, those who can still afford, because remember at the same time, you've got the sellers who could not afford all those bonds, who bought those houses during COVID when interest rates were at their lowest. So since interest rates have been going up, you've got people who afford sellers. Yes, people say this is a buyer's market, given that most guys continue to dump some of their houses under pressure.
Now to some other company news. Fikile Property Fund, who owns shopping centres in South Africa and Spain, reported an increase in foot traffic and also a strong demand for space across all portfolio segments. Also some good news coming from there.
I guess it was expected, given that their properties are well situated. I mean, in rural areas, townships, semi-rural, transport hubs. And we know that those kind of areas, we get more than 50% of people who frequent those areas or those malls spend more than 60% of their income on food. Hence, you see demand coming from the likes of retailers as groceries, and also from fashion, and fashion is mainly shoes. But you continue to see that consumers continue to be under hardship because there's no demand when it comes to electronics, but other stuff, there's good demand, and it bodes well for them.
Many thanks to Makwe Masilela from Makwe Fund Managers.